Imagine a country with more inhabitants than Japan and Germany combined. A place where the economy grows faster than in most G20 countries. And a young population and location between two continents create ideal conditions for expansion. This isn't a futuristic vision. It's Indonesia. With 270 million people, the fourth most populous country in the world is becoming one of the most promising players in the global economy. Gross domestic product grows by about 5% annually, and Jakarta is attracting more and more investors, not only from China, but also from Japan, South Korea, and the United States. Indonesia lies at the crossroads of key trade routes between Asia, Australia, and the Middle East. It controls hundreds of natural ports and resources essential for global industry, from nickel needed for batteries to oil, gas, and tropical timber. Is it Indonesia that will take the baton from China as the new factory of the world? In this material, we'll show what drives Indonesia's success, what obstacles it must overcome, and why this island powerhouse could shift the balance of power in the global economy. Watch closely, because this could be the most important country of the future. Indonesia is a young, dynamic, and rich country. The median age of its residents is only about 30 years. This means more than just an energetic population, its potential for explosive growth. Young people not only enter the labor market, but become a new consumer class that drives demand, develops services, creates companies, and invests. The country not only possesses vast resources of classic energy raw materials, such as coal, oil, or gas, which still form an important part of the global energy mix. However, the real treasure for new times turns out to be nickel, a key component of batteries used in electric cars and energy storage. Indonesia controls about 40% of the world's resources of this metal, making it a strategic player in the era of energy transformation. On top of that comes an explosion in the technological sector. Applications like Gojek are changing the way residents live, and fintech and logistics startups are attracting capital from Silicon Valley and East Asia. Indonesia isn't just consuming technologies, it's starting to create them. Is it youth, resources, and digital innovation that will make Indonesia the new economic tiger of Asia? When the world's largest economies break their trade ties, Indonesia steps into the game as an alternative. In the era of so-called decoupling, that is, the separation of the economies of China and the United States, global companies are looking for new places to produce, and they increasingly choose Indonesia. Moving supply chains to friendly countries, known as friendshoring, makes the archipelago one of the most strategic points on the global investment map. An example: Tesla invested in Indonesia because the country has some of the world's largest nickel deposits, a metal essential for producing batteries for electric cars. In a world striving to move away from oil and coal, it's nickel that's becoming the new gold of the 21st century. And it's Indonesia that controls about 40% of its global resources. Not only the United States and tech companies are looking toward Jakarta, Japan and South Korea are also increasing investments, moving part of their production to Indonesian industrial parks. Low labor costs, strategic location, and access to raw materials create ideal conditions for long-term cooperation. Indonesia also benefits from its membership in ASEAN, the community of 10 Southeast Asian countries. This is a market of over 600 million people, from which goods can be exported without tariffs and barriers. For many investors, Indonesia is thus becoming a gateway to the entire region. Will this country become the new factory of the world? Will it manage to take over part of the role that China has played for decades? Many signs suggest it will, if it maintains stability, accelerates reforms, and doesn't waste the opportunity offered by today's breakdown of global production chains. Despite dynamic development, Indonesia still faces serious challenges that could slow its march toward the position of a global powerhouse. On one hand, growing investments, a young society, and natural wealth. On the other, real barriers that could effectively halt this momentum. One of the biggest problems is infrastructure. Outside major agglomerations like Jakarta or Surabaya, many regions suffer from a lack of basic infrastructure. Roads are potholed or non-existent, ports are outdated, and access to a stable energy source is limited. This state of affairs hinders industrial development and deters potential investors who don't want to risk millions of dollars in an unstable logistical environment. The second problem is corruption. Despite the efforts of successive governments, Indonesia still ranks poorly in global transparency indices. Lengthy and opaque administrative procedures, bribes, and a lack of trust in institutions mean that foreign investments often get stuck before they even start. The country also struggles with enormous inequalities. While Jakarta shines with skyscrapers and modern shopping centers, on many remote islands, residents still lack access to running water and electricity. Differences in income, education, and public services divide society and could lead to social tensions. On top of all this come the effects of climate change. Indonesia is one of the most vulnerable countries in the world, exposed to floods, droughts, rising sea levels, and deforestation. If it doesn't find a balance between development and environmental protection, it could lose both potential and stability. Will Indonesia manage to overcome its weaknesses before it loses its chance for greatness? Indonesia's growth is not just a local success, but a phenomenon that could change the economic balance of the entire world. If the current pace continues, the effects will be felt by everyone, from global corporations to ordinary consumers. First, Indonesia could make technologies cheaper. As the world's largest nickel producer, the country has a key influence on the battery market, a fundamental component of electric cars, laptops, or phones. If Indonesian nickel floods the market, the cost of battery production could drop, which means lower final prices for consumers. Second, Indonesia's growing middle class is a new eager market. Young people are buying more electronics, cars, clothing, and digital services. For tech, automotive, or food companies, this is a huge opportunity to expand sales beyond the already saturated markets of Europe and North America. But Indonesia's growth is also competition. China and India may start losing their share in the global export of cheap products. Factories that once stood in Shenzhen are now increasingly being built in Java or Sulawesi. Does this mean your new phone will be cheaper thanks to Indonesia? Or perhaps it will be Indonesia that produces your next electric car? One thing is certain, this country's growth will impact the global economy more than many expect today. Indonesia has everything to become the economic giant of the 21st century. It's not just numbers, it's 270 million people, vast raw material resources, and a location that makes it a natural bridge between Asia and the rest of the world. It's a young, dynamic, and ambitious country. But the road to greatness won't be easy. Indonesia is still limited by weak infrastructure, lacking roads, ports, and reliable energy sources. Bureaucracy and corruption slow down investments. Climate change threatens stability, and social inequalities could spark internal tensions. Yet it's in Indonesia that one of the most important development stories of our times could unfold. This country has the chance to become a leader in green energy, modern technologies, and industrial production. It has the potential to shift the balance of power in Asia and the world. Will Indonesia become the new leader of the global economy, or will it remain just a promise? This is a question we'll find the answer to in the coming years.
Thank you for watching this episode. If you found it interesting, please subscribe to the channel and leave a comment with your thoughts. Your support helps us dive deeper into topics like these. See you in the next video.